Hello again, John Flynn here from Flynn Real Estate, here once again to give you my honest and professional opinion regarding the 2023 Canadian housing market. I'm going to get into statistics from right across the country this week, but first, a couple of stories from some of the major players in the real estate industry. First up, BlackRock extends block on UK property fund redemptions. So if you haven't been keeping up on the market, real estate in the UK, they're trending downwards pretty quick. Interest rates, of course, have taken their toll. And of course, BlackRock and their big REIT over there are having trouble, and so are some others. So let's read the rest of this. U.S. fund manager BlackRock has further delayed redemptions on its $3.5 billion UK property fund as it seeks to slow a rush for the exit by big investors worried about difficult market conditions. Of course, market starts going down or is going down, they want their money. BlackRock initially blocked redemptions due for payment in September after a high number of requests over the summer. It will now delay withdrawals that were due at the end of December 2022. Looks like they have a liquidity crisis or problem there. According to a person familiar with the group's plans, it is looking at a number of ways to rebalance its portfolio and free up cash for investors, including expediting sales of underlying property assets that were already in the pipeline. So it looks like there's going to be some price reductions over there in the UK by the sounds of it. Other fund managers, including M&G, CBRE, Schroders, and Columbia Threadneedle, have all restricted withdrawals from UK property funds in the recent months. That's pretty interesting. So they're not the only one over there. Next up, our good friends Blackstone. Blackstone offers backstop to lure University of California in redemption-stricken REIT. So, of course, we know Blackstone stopped withdrawals on some of their REITs, too, or on one of their major ones. Let's see what it says. January 3rd, Reuters. Blackstone Inc. on Tuesday said it had secured a $4 billion investment from the University of California in its unlisted real estate income trust that had been plagued by investor redemptions, after the private equity firm committed $1 billion to backstop the university's returns in the fund. So it looks like a big liquidity or cash flow injection there. UC Investments, the University of California's investment arm, agreed to hold its investment in BREIT for at least 6 years. In exchange, Blackstone will offer $1 billion of its own investment BREIT as collateral, allowing for that money to go to UC Investments to make up any shortfall if the university does not achieve a minimum 11.25% annualized net return through January 2028. So looks like University of California, probably a smart move, got 11.25% return in this market's pretty good. And Blackstone's going to back it up with their own collateral. I'm guessing they're going to have to sell some properties down the road very shortly. And one last thing before we get into December statistics, the BC cooling off period came into effect January 1st. And I just got to say, what a joke this is. This is like the foreign buyer ban, too little, too late. They say it's for a consumer protection act for buyers, but if you ask me, it penalizes buyers because there's a fee for rescinding your offer. So what happens is you have a mandatory 3-day cooling off period for any home purchases in BC, at which point, if the buyer backs out, they have to pay 0.25%, so a 0.25% penalty to the seller. So it's kind of like the rich get richer. Sellers, of course, they're selling their $2-3 million home, and the buyer, for some reason, backs out after or before the 3rd day, and they have to pay them. It's $2,500 on $1 million house. So for me, it's not a consumer protection. There wouldn't be a penalty in there. Again, it's too little, too late. Some people are saying, well, next time the market goes crazy or is a hot market, it'll be in place. And that could be 10 years. So that's a weak excuse too. So another terrible housing measure to try to look like governments are doing things. This is a complete failure. And I don't think too many realtors backed this, but let me know in the comments what you think. Now let's move on to statistics, starting with BC or Vancouver, Greater Vancouver area. Rising mortgage rates brought uncertainty and caution in 2022. The Real Estate Board of Greater Vancouver reports that residential home sales in the region totaled 28,903 in 2022, a 34.3% decrease from the 43,999 sales recorded in 2021, and a 6.6% decrease from the 30,944 homes sold in 2020. Last year's total was 13.4% below the 10-year average. Now, going forward this week, of course, sales are going to be down in December. It's a seasonal thing. So I'm not going to really focus on that too much. I'm focusing on ratios of sales to new listings and things like that. But let's continue reading. Last year's listings total was 3.2% below the region's 10-year average. The theme of my video this week is what happens when listings rise. So right now we had in Vancouver, in Greater Vancouver, I should say, we had a 3.2% decrease in overall listings for 2022, but a 13.4% decrease in sales. So when people are talking about, oh, low inventory, usually the decline in sales is double that of the decline in inventory. But we'll see that theme throughout the rest of the provinces or areas, I should say, that we're going to look at. And here is the Vancouver average price for December. You can see on detached, it's actually up marginally month over month from November to December. 8.5% from the previous December, it's down, and 14.2% from the March peak. In the attached market, it's up 2.1% month over month, up 1.2% year over year, and down 10.3% from the April peak. And the apartments, down 0.5% month over month, up 0.8% year over year for December, and down 9.4% from the April peak. Moving on to Calgary. Calgary, we have some mixed messaging here, so let's read what it says. 2022 saw record high sales and double-digit price growth. December sales eased, however. Slowing sales over the second half of 2022 were not enough to offset earlier gains as sales reached a record high of 29,672 units in 2022. So, of course, most places in 2022 had record first half of the years. And, of course, the second half wasn't so great. But they see that as a whole. Looking at 2022, they're trying to say it was record high sales and double-digit price growth. But, of course, we know where it's trending now. Let's continue reading, see what else they say. Housing market conditions have changed significantly through the year as sales activity slowed following steep rate gains throughout the later part of the year, said CREB Chief Economist Anne-Marie Lurie. However, Calgary continues to report activity that is better than levels seen before the pandemic and higher than long-term trends for the city. At the same time, we have faced persistent low inventory levels, which have prevented a more significant adjustment in home prices this year. So the last line sums up kind of the entire country at this point very accurately. The lack of inventory prevented a more significant decline in sale prices. And I believe that, again, title of my video, what happens when inventory increases, right? Right now, we're seeing sales price generally decrease with ultra low inventories. So what happens when inventory finally does increase? So you can see here, the inventory is down for December. These are December's number I have at the top here. Inventory is down 15% year over year from December 2022 to 2021, but sales are down double that, minus 31% year over year. Even though the inventory is down, they keep talking about the inventory, sales are double that, decreased double that. So that's pretty significant. So it's all relative, right? You can't just look at inventory. You have to look at the sales from year over year in the same time period. And of course, inventory is still super low. Here's the months of inventory for Calgary. And this chart, I just wanted to highlight, this is the percent price change per month going forward. Of course, we had some negative year over year price growth from 2018 to 2020. And you see 2021 and 22, it peaked. But we are seeing a trend of lower lows and lower highs, which obviously is a downward trend, meaning we're going to see negative price growth very shortly in Calgary. So just be aware, it's not all positive news in the near future, in my opinion. But again, we'll watch that trend and see where it ends up. And the Calgary average price, it went up 1% month over month, $5,000. It's up 3.7% from last December, $17,600. And it is down just under 10% from the February peak, or $52,000. So we are seeing some, obviously, resistance in Calgary. Now up to Edmonton. I had somebody ask about Edmonton. Why don't you do Edmonton? Here's Edmonton for you. And I'm going to give Edmonton, the Realtors Association of Edmonton, kudos. You guys present your statistics awesome. I didn't even have to really do anything to present it here today. I just used it as is. I added a few things in there, but I like the way it's probably the best in the country, the way they present their data. Anyway, here it is. December housing statistics. Residential unit sales and listings continue to cool for December. And here is their great infographic showing all the statistics. The highlighted there in yellow is what I'm focusing on. Month over month, the average house price in the greater Edmonton area down 1.9%. It's down 5.2% year over year, and it is down 15.5% from the April peak, which is approximately $56,000. Now, looking at the inventory, new listings there up at the top in the yellow highlight circle. Month over month, it's down 38.8% for December. That's a pretty big drop. And the sales are down 22.1% month over month from December. So this is the opposite from many other places or most other places in Canada where we're going to be looking at in this video. Usually the decline in number of sales is double that from the decline in number of listings. Now, looking down below, just below that, new listings for the entire year are down 12.9%, but the sales are double that. The declines are double that of the listings. So again, we've had 12.9% decline in listings, but 26.1% decline in sales. So of course, the sales are not going to be supported regardless of inventory. And down at the bottom there, we have days on market continues to rise across all sectors except for duplex and row houses, but that stayed the same. Now on to the Toronto Real Estate Board, TREB. I'm going to put both the new listings and the number of sales or transactions up at the same time here so we can compare. New listings are down for December 21.3% compared with December 2021. And of course, we see that same trend. Sales have declined more than double the amount that new listings have declined, 48.2%. So again, talk about inventory, but sales declines far outnumber the inventory declines. Now, looking at the average selling price in Toronto Real Estate Board, it's down 9.2% from the previous year, from December 2022 to 2021. Now, I put November there on the side. November was only down 7.2%. So the declines are getting bigger month over month. 2.6% they lost, or 28,000 from November to December. And they are down 21.2% from their February peak. That's 283,000. I'd like to give a big congratulations there to Greater Toronto area. You're now in the 20% club. It's a new club I've formed. There's a few places in it now, depending on where you are, provincially, cities, different ones, but they're now in the 20% club. Days on market in Toronto or TREB have jumped significantly. Both statistics here, 110% more than last year and 92.9% more days on market, depending on what statistic you're looking at. Now on to Quebec. Just a couple of highlights from their real estate board. Quebec's city activity continues to normalize and listings only increase moderately in December. Interesting, they've had a moderate increase in listings in Quebec City. The Montreal market closes the year with a limited price decrease despite a sharp decrease in sales. So obviously sales are down. Let's look at their numbers. Montreal area, single family median price down 1.9% month over month, 3% year over year, and down 12.1% from April. So declines across the board there. Condo median price in Montreal down 1.3% month over month, down 1% year over year, and down 8.5% from their May peak. For the whole entire province of Quebec, not just Quebec City, but the entire province, condominium prices, no change month to month, down 1% year over year and down 10.2% from April. And median price single family in the entire province of Quebec, no change month over month, down 13.5% from May and down 1% year over year. Put those ones in different order for some reason. Average days on market is increasing, but again, it's December, so you generally in the winter, days on market does increase in most areas. Lastly, on to Nova Scotia. I was doing this before as just Halifax area, but the data takes too long to come in, so I'm using the entire province of Nova Scotia now. The data is just easier to get and more consistent right from the Canadian Real Estate Association. It actually comes from the Halifax board, but it gets filtered through. MLS home sales in Nova Scotia returned to pre-pandemic levels during the month of December. So, of course, we just heard that same line, I think from Calgary it was, pre-pandemic levels. Let's take a look at the chart and see what that looks like. So yeah, you can see here the 10-year average pre-pandemic 2019, 2018. Of course, they were elevated, lots of sales during the pandemic, especially out there, people moving out for more land, more space, whatnot. So I'm going to keep this chart on, but you can see there's a 29.5% decline in the sales activity from December 2021 to December 2022. And when we leave that side by side with the new listings for December only in Nova Scotia, new listings are down 13.2%. Very similar trend we're seeing in most areas now. Listings are down, or new listings are down 13.2%, but the sales declines are double or more. This is more than double, obviously, 29.5. Well below, both are well below the 10-year average. And all active listings, not just new listings for December, way below the 10-year average, which probably isn't a big deal, knowing that the sales are even lower. And the residential average price from Nova Scotia, it's down 1.1% month over month, down 1.5% year over year in December, and they are down 21.5% from the April peak, or $99,000. You can see it here in the chart. I could say welcome to the 20% club, but they think they reached that the month before in November by the looks of it. So yeah, that's it for the statistics for December across the country. Of course, we will have the CREA stats coming out to see what they say. I don't think it's going to be really anything that different. Inventory down, sales are down. And again, I pose the question to you, what happens? You know, we hear inventory's down, sales are way down, even further than inventory. But what do you think happens when the inventory increases? I personally think inventory increases, buyers have more options. It's harder for sellers to sell the homes because they have competition now, right? Of course, coming the springtime, there will be more buyers too. But let me know what you think in the comments. When inventory increases, how will that affect prices? I don't see it having a positive effect or an increase in home prices because of increased inventory. I think it's going to be the opposite. But let me know what you think. And until next week, I'll see you then.